Hi, I'm Mike Capizzola, and you're watching Smart Money, the show that gives you the inside edge on the bets that the movers and shakers on Wall Street are placing. This week, we're looking at a company in one of the most crucial sectors for the U.S. economy, that of transportation and logistics, a sector without which would leave many businesses high and dry. The company that we're specifically interested in is Universal Logistics, which was founded way back in 1932, and since that time has evolved into a holistic provider of logistics solutions across North America, with revenues of more than $1 billion per annum. Universal Logistics is headquartered in Michigan and listed on the NASDAQ and has a market cap of just under $550 million. The business operates in several key sectors and industries, including the aerospace, automotive, energy, healthcare, industrial, retail, and government services. Services include cross-docking, materials handling, and warehousing, as well as intermodal freight forwarding and traditional trucking services in what amounts to a 360-degree transportation and logistics service. In its Q3 2020 results published at the end of October, the company reported revenues of $365 million and operating income of $22.1 million, which netted out to earnings per share of 50 cents, and saw the reinstatement of the company's quarterly dividend at a respectable 10.5 cents per share. The company's results are geared to the reopening of the industries that it serves, one of the most important among these being the automotive sector. Back in October, the company was feeling positive about a rebound in the sector, which it described as a primary driver behind Universal's solid performance in the third quarter of 2020. The intermodal business, which involves transporting containers from ships to port and onto trains or trucks, has also been picking up as imports begin flowing back into West Coast ports. The company said that it had a substantial opportunity to leverage their resources and capitalize on the recovery seen on the West Coast. The attractions and potential upside within the business as the economy reopens and reflates have caught the eye of industry insiders. In this case, that's Matthew T. Maroon, son of Matty Maroon, who built up a billion-dollar empire in trucking and infrastructure, but passed away in July this year at the age of 83. Maroon Sr. was a controversial and colorful character who was well known for litigation. He rose from humble beginnings to become one of the top 1,200 richest people in the USA. Matthew Jr. has now taken over the family's business interests and has been buying stock in Universal Logistics, topping up an existing holding through the purchase of 1.4 million shares at a price of $19.45. That's an investment of almost $28.6 million and quite a chunk of change that takes the family holding to just over 14.3 million shares. Universal Logistics stock has underperformed in 2020 in line with the contraction in its underlying markets, but the Q3 results and the reinstatement of the dividend suggest that the worst looks to be behind them. The stock trades on a forward PE ratio of 6.58 times earnings, and a price-to-sales ratio of just 0.41 times, and a price-to-book value of 2.41 times, according to data from finviz.com. The scope for expansion in those multiples is probably why the Maroons have added to their holdings, and when experienced hands are buying, Wall Street tends to take notice. Indeed, the stock has started to pick up, trading back above $20. The year-to-date high is $23.94, and the two-year high is $27.49, which gives us an idea of the journey that may lie ahead. Of course, these remain uncertain times, so please remember to always do your own due diligence before making any investment decisions.